Hi there, my name is Andy Farquharson and I'm your host on Alternative Exit, the podcast dedicated to educating small business owners about the possibilities, benefits and challenges of transitioning to an employee ownership model. Did you know that there are over 200 million SMEs around the globe with an owner that will be retiring within the next 10 years? Many of these owners will never actually find a buyer for their business, forcing them to close their doors, wreaking havoc on their employees and the communities. There is an alternative. This show will explore different forms of employee ownership and the best practices for a successful transition. Each episode is going to feature interviews with experts on employee ownership, business owners who've successfully made the transition, and consultants who've helped facilitate these changes. Okay, now let's get on with the show. Hello everyone and welcome back to the Alternative Exit. Today's guest, we have Tiara Letourneau. So she comes to us with a Masters of Finance from Cambridge. And she uses that to help design and optimize multi-billion-dollar climate funds. And through that, she's proven to be an expert in designing innovative finance solutions to help tackle the world's biggest problems. She's now turned her lens towards employee ownership, as board chair of Employee Ownership of Canada and a key architect of Canada's emerging EOT legislation. She's also the co-founder and CEO of Rewrite Capital, which is Canada's premier M&A advisory firm dedicated exclusively to employee ownership trusts. So very, very focused on the topic that's very dear to all of us. So Tiara, welcome to the Alternative Exit.
Thanks, Andy. Such a pleasure to be here.
Yeah, look, I am so excited for this call. Not only have I heard your name coming around these circles a lot, but also doing this research into prior to this helped me understand the depth of experience and knowledge that you had in sort of finance, and as I said, utilizing that knowledge for impact. Because coming out of a Masters of Finance from Cambridge, the typical path probably isn't towards impact finance and helping people to optimize for that. Most people are probably heading towards more sort of very commercial areas. What drove that focus for you towards more impact?
Yeah, great question. Finance was actually my second career. I talk about my career in two waves. I actually started in the world of international development. So I got an undergraduate degree in business, but I really wanted to go see the world. I was very passionate about microfinance. It was the time when sort of Muhammad Yunus was really sort of at his peak popularity, 2005. And so I worked in microfinance first in North Africa and Tunisia, and then I did a master's in South Africa. I did some policy work there and just had a passion for how microfinancial systems work. And the good policy can either really improve that landscape or really make it a lot harder for people. And that's what I did and what I was excited doing. In 2008, my family, who are all from the west coast of Canada and British Columbia, went through a bit of difficulty and said, we'd really like it if you could come home. You haven't been home in a long time. We need you a little closer. And there was no development work in British Columbia. So I needed something to do. I ended up getting a job at Canada's largest bank, RBC, Royal Bank at the time, in Aboriginal finance. So all of our First Nations communities are at various stages of financial development. Some have billion-dollar real estate blocks, and some are working on making their clean water. And it was like a place where those themes could interact. They hired me 2 weeks before Lehman Brothers fell. So I walked into an industry that was on the precipice of a collapse. No one got fired from my team, even the newest person to the team. And so I suddenly, all this passion I'd had for microfinancial systems shifted when I realized that the macrofinancial landscape was highly unstable and that we had done something that created a vulnerability. And that really set me down the fascination with finance. But you're right. A few years later, when I went to Cambridge University to really understand the mechanics of finance, I was not going in there to understand them for the purpose of making profit for myself or for the investor class. I was really trying to understand what went wrong in the world of financial stability policy and how it all worked. It was eye-opening and fantastic, and I loved the UK. My time in the UK was wonderful. But yeah, I after that, I returned sort of to the world of development and with a focus then on impact financing, and had an opportunity to work in some very interesting areas: Islamic finance, climate finance, Aboriginal finance again. So yeah, and ended up here. To my great surprise, I had no idea that this is where I would end up. But this is the place I think that ties all of those themes together, right? Employee ownership. It is about people. It is about development. It is about economic systems. It is about impact. It is about finance. So yeah, this is like, I feel like this is the sweet spot of all those things I'm passionate about.
Well, I mean, how did you learn about employee ownership? Because you said it's not spoken about in most universities, and back then it was probably that there wasn't really an industry in Canada.
No, there wasn't. We were pre-industry in Canada. So I was living, so after Cambridge, I moved overseas to Asia to work in climate finance, and came home right when the pandemic hit. And it was about a year after that that I met my business partner, the person who's my partner at Rewrite Capital. And I really give credit to her for the question, because during the pandemic, we really saw how frontline workers experienced the conditions of the pandemic very differently. And I met her just shortly after that was taking place. And when she heard about my background in impact finance and financial product design, she said, "You're just the person I want to talk to." She is a successful exited entrepreneur. She's had a couple of exits, sold her most recent company to a very large telecoms communication provider here in Canada. And she said, "I want to invest in companies, but I want to do it in such a way that frontline workers, particularly if they're minorities or racialized or women, that they benefit from the investment that I make in that company. How do I do that?" And I mean, you know the answer because we're here talking about employee ownership. But the truth was, I had no idea. At the time, I had no idea. My job was always to find innovative finance solutions to get money to go places it didn't want to easily go. And I told her, I don't know, but we could figure it out. And that was really the inception of Rewrite Capital, which at the time was, in our conception, was going to be an impact fund. So we started looking. We looked at everything. We looked at entrepreneurship through acquisition. We looked at cooperatives. We looked at all kinds of things. And it was when we found ESOPs in the United States and then EOTs in the UK that we said, wow, there's really something here. Like, in the world of international development, you're always trying to redistribute wealth without taking it away from anyone. It's very, very difficult to do. The best we seem to do is redistribution of income. So we take income from people and redistribute it elsewhere, but wealth is hard. And this is almost a silver bullet for that if you scale it. And so we got very excited about it. We started looking at the US, which has such a well-developed ecosystem for investments. But then our next stop was a lawyer in Canada, a very good trust lawyer. And we said, is there a way we could do this in Canada? And her answer was, no, you can't. You would have to change the Income Tax Act. And so we said, okay, let's go change the Income Tax Act.
Okay. I love that answer.
Yeah.
That's super cool. So that's, like, I love it. I love it how you guys are coming from the problem first, right? And then just go, how do we go solve that? And to be honest, like, I don't know, I hear that's how quite a few people head towards employee ownership. And it's great to hear that, like, that sort of main goal of redistributing wealth without taking it away from anyone. Because, like, I think, as I said, this is the silver bullet. This does do, like, employee ownership does really solve that. Like, we're without being extractive and from anyone, and only being sort of helpful to the people there. So, like, going from that point of, hey, we need to go change the tax code in Canada, what was the journey that you guys took? I mean, was it, hey, look, let's get the system set up first, or were you looking to be able to, like, find some pilot cases and really sort of just stress what was possible within the current legislation?
Yeah, I mean, so the great thing about, so we were looking at it through the lens of impact investors, and we're both Canadian. We're both very passionate about being Canadian. And so it's nice that there's this ecosystem in the United States. And we were willing to start there if that was the place to sort of prove that this could be done with Canadian investment income. But we were just really excited about the idea of doing this for Canada. So we put together a position paper and hired a lobbyist, because we're not lobbyists. We don't have those kind of links. And did a lot of research into the US, did a lot of research into the UK, and started lobbying, and kept bumping into Social Capital Partners' name, and had a few sort of, like, touch points with them. And once we hired our lobbyists, we discovered not only had Social Capital Partners also been working with those same lobbyists, but that Social Capital Partners was 6 months ahead of us in the lobbying process. They'd already been working on it, maybe more, 7 months, and that we were asking for the exact same thing. And when I say exact same thing, I don't mean like 80% the same. I mean like 100% the same. And it was actually the lobbyists that said, like, you guys should just do this together. You should actually build a coalition. And a lot of credit to John Schell, who, I just adore. And he really led that initiative, and the work that they had done in advance made fighting for it so much easier. But we joined forces with him very early on and created this coalition to try to get the legislation over the line. And I want to speak to why I think we had the exact same requests. It is due to the very open and transparent US and UK communities who were willing to share everything with us. What has worked, what hasn't worked, why that's the case, what are the unintended consequences. So by the time we put together a position paper and Social Capital Partners put together a position paper, we had the same answers. We said, if we were designing from scratch within a Canadian framework, what would we ask for? And that is why it was so similar. It was because of the fantastic, transparent advice we were getting from those communities.
Yeah, they are incredibly generous with their time and knowledge. And look, for those of you, other listeners of the podcast, you've probably heard a couple of names that are familiar, like in terms of Social Capital Partners and John Schell. They're from earlier, I think it was in episode number 4 or 5. I'll put a link for that in the show notes so you can go back and learn a little bit more about that story there. But yeah, like that the community is so strong. I mean, I think everyone sort of understands that it's a great solution, one that doesn't need to be concessionary, like for anyone. Like it does create that opportunities. And so, like, as you were thinking about that transition of like utilizing that from an impact investing landscape, I mean, you went through, you did some amazing work, like with that lobbying in terms of with building the coalition. You then you've got this sort of EOT. You've got you've got another year or so, I think, to be able to go get some wins on the board and really prove it. How did you think about like funding these transitions and bringing sort of finances on board to be able to help drive these transitions towards employee ownership?
Yeah, so once we realized that we were going to get legislation and that it would be good, usable legislation, because there was a couple of drafts that came out where we were like, oh, no, no one's going to use that. So once we realized we had good legislation, we stopped focusing on the US at all. We pivoted our attention 100% to Canada. And we also asked the question, what does the Canadian market really need right now? Like, what is going to help companies the most? And the answer was not impact finance. Because the problem with most of these transactions isn't usually access to finance. And we can come back to that because it is a component. But the most important part actually was transaction knowledgeability. They needed support for transactions. Do you understand what the legislation is, how it works, how to go through one of these? And so we went back to collecting best practices from both countries. And that's when we pivoted from impact finance. We don't do any financing in Canada. We're entirely focused on transaction support. And our team is really made up of 2 components, and this was super important. When you look at transaction support in the US, you usually see financial and legal support. Those are the primary. And then a communications team will come in at the end to sort of do some communications training. When you look at the UK, the support tends to primarily be legal support. And what we realized was that companies that go through these transitions, both in the US and in the UK, they have a major cultural problem that comes from a lack of planning in change management, particularly as it affects governance. And so when we built Rewrite Capital, we said the team will be composed of 2 streams that work very closely with each other. We have our M&A. M&A takes care of financing, including bank financing or investment partners, so sourcing and helping people get connected there. It does things like calculations for repurchase obligations if required, if they're forecasting that into the future. It also does a lot of the due diligence work and coordinates with the legal team and the trustee team. So very typical transactional M&A stuff that you would see. The other half of our team is called Design and Implementation. Our head of that is a master's in industrial psychology with a specialization in adult pedagogy, so teaching and training adults, because there's a lot of education required to understand the components of an EOT, including the new roles of trustees, of board members, how management roles may change, how owners' roles may change. And every culture is different and can be in different states of readiness to undergo change. And so while our transaction team is working on a transaction, our design and implementation team is creating internal experts, internal advocates, retooling their governance structure, and doing it all in a very bespoke way that's sensitive to the culture and the outcomes that the company wishes to have. And so that's really what we do now, is we do those two things. And I have to say, I feel like the results from it are very, very good quality. We see teams that are going through this now, large teams, all different levels of sophistication. Some teams have like a very sophisticated consultants. Other teams, like we have a team that just went through 750 people that are in the care sector industry, folks who are frontline who help adults with disabilities or children with learning disabilities. And this is not their area of expertise, but they are still able to go through this in a very unified way because of all the time and attention that gets put on the change management process.
See, I'm so glad you brought that up. This is something that, I guess, something that we've been thinking about. It's been part of a lot of conversations on the recent podcasts, is that common challenge that most people have is around that cultural transition. Obviously, if you're able to solve the finance, the UK's got that sorted with their capital gains free exit, that doesn't happen everywhere. But there is still so much effort that needs to happen on that design and implementation and communication. How do you guys finance that, as part of the transaction, or is that something that the company who's making that transition would then go and fund, would then go pay for?
Yeah, so it's included in our service. So most M&A shops, when you do M&A, they'll charge a fee. We like to say our fee is inclusive of all that. So we're pretty much even with market rates. If people are out looking for a private sale and they go to an M&A advisor, our fees are going to be pretty much the same. But where your M&A advisor will do a lot of sales and negotiation on your behalf, we're putting it into design, implementation, and training so that your internal team is really ready to go. And I think that's an important thing to think about, is when you're selling to an outside party, it's their problem after the sale, how communication goes, how transition goes, what the next plan is. If you're selling to your own people, it's your problem after the sale. So in some ways it's easier because the plans may not change so much in terms of what you're doing with your company. But what really changes often is that governance structure. Is people, if you imagine a very typical situation, you have somebody who is the CEO and the board and the shareholder all in one. They've never really separated those roles in their mind, even though legally they are holding three separate roles. It's just like one thing. That's going to change when you do an EOT or an ESOP. So that's really a big part of where we lean very heavily on understanding the differences between the roles and doing a lot of training and education so folks understand not only what if you are an employee manager who's about to take a board seat, what's the difference between those roles and where do those roles interact and where are decisions shared, right? So there's a lot of gray area in governance. There's the law, but then there's also in practice a lot of gray area, and every company has to understand how they want to handle those interactions.
I'm so excited about diving into that a little bit further, because it said that's where the real sort of value and impact is going to come. Because if you don't get that right, the business isn't going to be around for much longer once you go through that transition. So what do you think is the biggest challenges for employees, these new employee owners, to adapt to within the new ownership model?
Yeah, I think the biggest. I like to go back to what is a trust. Let's start there, because that's going to really impact on where the employees experience confusion. You tell an employee that they've just become an owner and they don't know what that means. And I would say there's a cultural default that if you say to somebody you're an owner, or you say to somebody that the company is employee owned, they immediately think of a worker cooperative. I don't know why, but they assume everyone has a share. They may or may not have bought that share. Everyone has voting rights and everyone is part of board decisions. And that is not what is happening. And we like to tell people, it comes down to what a trust is. A trust is a legal vehicle that allows you to separate the benefit of ownership from the right or responsibility of ownership. So your employees are going to have the benefit of owning the company, but who has the responsibility of owning the company or the rights attached to that responsibility? Those are your trustees. And so that's the first distinction that we need to help employees make, so that employees understand I'm a beneficiary owner of the company. And so the value that is created, that I help create, is going to flow back to me. But that doesn't necessarily mean that I am in a decision-making capacity at a shareholder level or at a board level. And that's the first distinction. Now, we encourage a lot of employee participation, and we certainly want open channels of communication, and we like to have mechanisms that allow employee voice to be at the board. So we like to have all of that. But the first distinction we have to make is the difference between the beneficiary and the responsible, so that they can understand what that primary piece is.
It's just that big difference between ownership and management. But exactly. To be able to help them understand that is key.
Exactly. And we do a lot of training to help trustees communicate what is a trustee issue and what is a management issue. And sometimes they're totally separate, but sometimes there are things that intensely overlap. Like it might seem like, employees have an issue with a spend that happened, and it seems like a management issue. But if you go a layer deeper, it's actually about how value is being created and deployed in the company. So that is really, that question is it a question about value creation and deployment, or is it a question about the practices and processes of the company? We do a lot of work to help employees sort of distinguish between those, to understand whether it's something that should be a conversation through management or something that should be a conversation up to your trustee. And it takes a minute, but it's not rocket science, right? It's, I feel like the confusion tends to be more present when time hasn't been taken to really break down how these things work and give people a chance to learn about them.
Yeah, well, I think you're right in that it's not rocket science, but so people need to find the right environment to be able to feel and really sort of experience that. So how do you, what's one of the sort of really super tactical thing that you guys do in your training to help people really understand that difference between sort of the being a beneficiary and being an owner?
Yeah. So prior to transaction, we put we call them the ABCs of an EOT. So we call it the Assembly of Trustees, so the group of individuals acting as trustees, the Board of Directors, which is your corporate governance, and your C-suite managers. And we put the ABCs in a room together pre-transaction. And so when we get those individuals in a room, first we do a really clear job of explaining, what is your EOT structure? What is your governance structure? We break down the difference between those roles, and then we play games. And those games, we really gamify. We go, okay, here's an issue that came up. Whose issue is this? And where do they interact with those above? So board to trustees or management to board. And do you interact with those below? And so it fosters amazing conversation, and we try not to give them the answer. We try to say, here's a scenario, what are you going to do? And they have to work it out in the room, and they're each sitting in the seats that they hold, right? So the board members are saying, well, sometimes board is like, okay, well, this is our issue. And trustees were like, well, actually, this is about a value deployment issue. So you need to be consulting with us as well. And so you can start to see the conversations working together. And we do, that pre-session is usually 2 days. We do 1 day heavy learning and 1 day heavy exercise so that people get used to holding those seats in those roles.
That's a big commitment, I'm sure, for a lot of people to sort of to get their head around with, especially for people who haven't really invested a lot in culture in their company, which I'm sure happens for quite a few companies that you're speaking to. How do you help them these owners to really believe that this is an important part of the transaction? Because the other M&A advisors, they're not asking them to do this kind of work.
No, they're not. Yeah. I mean, it's such a great question. And I think we're a little bit spoiled right now here in the Canadian market because we are attracting vanguard companies who are passionate enough about their people or their companies or their culture to be the first out the gate to do it. We can talk about what those look like, but those vanguard companies often do have a great sense of culture. They have a real sense of purpose in their company. So it hasn't been as difficult. Look, I'm going to be honest. We have had folks that have come to us and say, will you just do the legal financial for us? And we say, we won't. We are not really interested in making bad EOTs. I'm just going to be honest. And we often say to our clients too, who once we get into the design process and we recommend that they bring people from frontline, middle management, not just senior people sitting in a room and talk about design. Canadian EOTs are a little more complex than UK EOTs in the sense that you can have multiple formulas inside your EOT distributing value in different ways to people, which means you've got to have conversations about what you want in place. We do not recommend owner imposed. And the reason why is because it is okay to disagree and have a fight about something, but it's really better to do it before you have a locked trust in place than after. Yes. So we tell people through this process, like, if you're going to have friction with your company, we would much prefer that you do it just pre-transaction in a very focused, guided way than to have years of friction afterwards, which is real. That can happen. You can transition your company. You can do it without change management, and you can have 2, 3, 4 years of intense friction in your governance system with your management teams and your culture that will work against your productivity and all of the things you're trying to achieve. So that is really how we bring people along. I would say from the people that we've said, no, we're not we don't do just legal financial transactions. There must be a cultural and design component attached to it. No one has permanently gone away and said, I'm not going to do the culture change. I think once they really think about it, because this is about the victory you're going to have on the other side. And our goal isn't to make an EOT, it's to make great EOTs, which doesn't mean we're telling you how to do culture. You do your culture. Like that, we're trying to preserve your culture. But we want to make sure that everyone is ready to go under that culture, under this new arrangement. And so that's really, I would say that's the team's passion, right?
Okay. And what type of, when you speak to these owners and you're saying, hey, this before the transaction, you're going to have to tell your team. You're going to have to tell everyone in your team because we've got to get those sort of people together. I mean, how's that conversation go? Is that a big moment? Is it a big moment for these owners to sit there and actually sort of to go out and trust their team? I mean, how do you broach that?
Well, I'm gonna spot check that because no one that we've helped transition has told their entire team before transaction. They will choose select individuals to participate, but those individuals should represent very different views. And the reason why is, like in a Canadian model, you can distribute profit, but you can also distribute equity. And you can distribute both. And if you want to distribute both, you can do them on completely separate formulas. What goes into that formula, too, is rewarding different things. Sometimes you're rewarding tenure. Sometimes you're rewarding rank and responsibility. Sometimes you're rewarding the number of hours worked. And so if we just impose that on a team and lock it into the trust, then you potentially have conflict on the other side. And one of the potential dangers is that your management team, who are really outspoken and usually very responsible, ready to take on a lot of responsibility. That's sort of part of what you need to have for an EOT as a management team that can run it. They're very vocal about what they want, but then they could totally sideline what your entry-level staff wants or those who are younger in your organization or who are newer. And that can have some serious knock-on effects later on morale or creating a sense of us and them. And that's part of what we want to avoid too. So we say, pick 5 to 7 people that are trustworthy, that can keep this under their hat, that can go through the whole learning process and represent the voice of whatever it is they're there to represent. So this isn't just general people. You're going to try to pick someone who's frontline. You're going to try to pick someone who's mid-career. You're going to try to pick someone who's early career. You're going to try to pick a manager. You're going to try to pick someone in your C-suite. Once all those voices are in the room and they get comfortable together, you will have a good conversation about what is going to drive the organization forward. And so, yes, I would say one of the number one concerns that people have is, I don't want to tell my people, they'll be terrified of change. And we say, you don't have to tell everybody, and you don't have to tell anybody until you're in a transaction process. Like you can do feasibility work, you can roadmap what this might look like, but when you're designing those benefits, you need to have multiple voices. That's what's going to create a great outcome. Yeah.
Yeah. So you've talked a little bit about the and surely, what does it, in terms of this cultural work, what does it look like post-transaction? How long are you staying with companies to help them through this process? And what type of tools and systems do you help them set up so that they can carry on without you?
Yeah, so at the moment, we're very focused on the transaction window. So we want to get them through transaction, make sure they've done their implementation, so they have their communications in place. Their trustees we train the trustees a lot. There's a lot of trustee training, but their board and their ABCs understand how to run the organization under this new framework. We give them a set of guides, and we we recommend that they work with a professional trustee. Now, you don't have to have a professional trustee sitting in a trustee seat, but at the very least, we recommend that for 2 years, work with someone who is a trustee, because you may not know what questions you are not asking as a trustee that you should, or how to weigh certain things when decisions are coming up to you. So we try to put some like key guidance in place. We also will connect boards. Like if a board is professionalizing for the first time, we'll connect them with great board development partners. But our hope here is just to get that transaction to be an excellent transaction, to set them up for success. If there are weak spots, then we'll recommend that they work with other professionals in the market. So we're not trying to do it all. We're trying to make sure that they design something that's really well suited to them, and that they can finance it and transact it in a way that works for the company and the owner and the employees.
Okay. How do you find experienced trustees, considering that the EOTs just started? Like, is it sort of obviously other forms of trustees, just that you find have a cultural alignment? What does that look like?
Yeah, great question. So we work primarily in transaction. We work with two trustee groups that we like. One of them, they're corporate trustees. They are often trustees for registered plans, or in Canada, we have something called a tax-free savings account that can hold corporate assets within it. So they understand businesses and they understand business law. So those are the individuals that we work with that are Canadian. There is a US company that has a branch up in Canada that also has done a lot of ESOP work. So we have them as well. But there's also, people who are professional directors, board directors. So in Canada, the designation is commonly an ICD. So that's somebody who is a corporate director. They often have held trust roles as well for things like mutual funds, or other things where they understand that the trustee's function is to keep an eye to the benefits for the beneficiaries, and the board's role is to keep an eye to the performance of the company, and they talk together, right? So someone who has a strong background in directorship can also often sit as a trustee, so long as they're very clear on their role distinction. But we do work with professional corporate trustees. Building experts is a huge part of what we are trying to do, both at Rewrite and I'm also chair of the board at the EOC, Employee Ownership Canada, which is like your EOA in the UK. And so we are working very, very, very hard to bring more partners into the space, more lawyers, more accountants, more banks. And so education is a big part of what we end up doing. I think that's true in EO everywhere, because, the United States has got a 50-year jump on us, but the rest of us, we're all trying to help everybody to understand that this isn't, it's not a high risk transaction. It's a very low risk transaction. It's just not as certain if you aren't familiar with it, right?
100%, right? And as I said, something new, it's always difficult to get people to adopt something new. So I just want to go back a little bit and think, because we talked there about owners in a lot of companies wearing all of the hats. There's sort of, especially when it comes to the governance, so doing it both from legally and also just being really sort of reticent to let go of control. I mean, what do you think is the toughest part for those owners to be able to let go of some of those?
Yeah. That's definitely something that comes up over and over again. I think the one that is the most intimidating for owners is the idea, if you've never had a board, that you're suddenly going to be governed by a board. And I think that loss of control isn't really about loss of control. It's about loss of role independence. And I mean that very sweetly. We talk to people who tell us that they have a high fear of losing control, and we say, well, are you doing this as a succession plan? And they're like, well, yes, I am. And I'm like, well, if you don't do an EOT, what happens to your sense of control? And they're like, well, I have no control. And you're like, right. So why is the idea of an EOT make you feel like you would have less control than if you were selling to a third party? But actually, I think that there's a vulnerability that exists when someone is going to continue to be in a leadership role in a company, but they're not going to be the only leader. And I think in some ways that's more scary. There's a very high number of entrepreneurs who have seller's remorse when they sell to a third party, any third party. I've talked to people who have, grown impact companies, and they have sold them to impact investors who seem totally aligned. And the day after transaction, they are working in the company against everything they believe, because those impact investors didn't really have impact in mind the way they did. And the seller's remorse is huge, right? But people don't talk about the loss of control there, even though you have a total loss of control. But they do when they're talking about EOTs. I think the idea of sitting on the board and not being that central authority that you have been before is intimidating in a way that just walking away from a company isn't, even if what we see is that people have a much higher rate of satisfaction. So we treat it real, like it's as though it's a real psychological barrier. And part of what we have to do is we have to walk people through saying, what do you really want for this company? Like, what do you really want? Like, when you imagine walking away from this company in a way that makes you feel full of joy and calm, like you did a great thing, what does that look like? And they often bring themselves to that point, because actually building a really strong company post their like reign involves having other people. And so that's a big part of, that psychology is real. We never try to skip over it, and we never try to belittle it. These individuals have held these companies up for a long time. They are where they are because of them. I think once they realize that their role on the board isn't about control anymore, it's about support, it's about education, it's about a steady hand, then their comfort really goes up. But it does take a minute to reframe that.
Yeah, totally. I love that. I love that focus of sort of what's on that emotional connection, like on legacy. What is it you actually want from this transaction, and helping people to get there? I think that's so incredibly strong.
If I may jump in, that's one of the things that we find most frustrating about the general succession conversation of businesses, like not just in EOTs, but just generally, is you actually have a lot more choice than you think you do. If you talk to an M&A transaction advisor, you talk to an accountant, they're going to tell you that the way is the most common way. They're going to say the most common way is the way, and these are your choices. Actually, there is a lot more flexibility than that. And I think the Canadian EOT, for example, is like a highly flexible tool. But even in the UK, you can have a partial EOT with a management buyout. You can structure these in so many ways. The question that advisors often don't ask, they're so quick to tell you what is the way things are done. The question they forget to ask is, what do you wish to preserve about your company? What do you really want to protect and preserve? And if you start there, then the answers that flow from that they're just better suited to your company. Instead of trying to shoehorn your company into a transaction, the transaction should flex to you. And these tools usually have enough flexibility to do that, but you need an advisor who understands how to bend them, right?
I love that so much. That question is definitely one I'm going to be borrowing as well. What is it that you want to preserve from your company? So powerful. I'd just love to turn the conversation very quickly to, how you help people finance these transactions, because looking at it's like obviously in the UK, there's it's predominantly seller financed. The US, like they're using a mix of sort of equity and debt. And it seems like the Canadian EOT gives you that flexibility as well to be able to sort of be able leveraging debt as part of that transaction. What does that look like? And what's the sort of debt markets that are available for an EOT?
Yeah. So I think, this is a great question. This is a big part of it. I'm going to preface this by saying that Canada's model is just a little different in that we have a capital gains tax exemption, but it's not a full exemption. It's not a full deferral either, like the United States. It's for up to $10 million. So the first $10 million of the value of the company will have no capital gains tax applied against it if you qualify for it. And so that drives people, but it doesn't drive them to sell the full value of the company. So an EOT in Canada has to own the majority share, so more than 50%. We'll shorthand that by saying 51. So a lot of people are electing just to sell 51%, and they can get bank financing often for that full amount. So it means that on day one, they can get that transaction. Now, where are we getting that from? So we're lucky on two counts, lucky in the Canadian market and lucky here at Rewrite Capital. So lucky in the Canadian market is the coalition, the core team at the coalition, which included myself and John Schell and several other entrepreneurs, also included the head of capital markets from Bank of Montreal, BMO.
That's handy.
Yeah, it is. It's super handy. And she fought alongside us, and they're also a key sponsor of Employee Ownership Canada. And Bank of Montreal in the United States is, I believe, the third largest player in the ESOP market. So they really understand the value and the potential, and they're not afraid of the newness of the model. So we started with a fantastic financing partner who understood, who could bring a lot of expertise, who was there. They understand the model really well, and they've got a whole team. So that's a first advantage. But what I do want to say is we have found 14 financial partners across the country, everything from large institutions that compete with Bank of Montreal to small credit unions that do not require a personal guarantee. That is at Rewrite, if somebody says we're going to need personal guarantees, we're like, deal's dead. So we are only working with banks who can do this without a personal guarantee. We found 14 of them who are willing to do EOTs. And that's where the second lucky is. Our head of M&A here, our director of M&A at Rewrite Capital Advisors, Tracy Jang, she has a background in finance, venture capital investing. She speaks the language of bankers. And so when we walk into a bank, we're not making the case for an EOT. We're making the case for good leverage on a company that can deal with it. And so we have not yet, because of the way she's able to communicate with them and present that, we have not yet come into a situation where we have not been able to find a banking partner. Typically, we can present our client with anywhere from 3 to 5 term sheets, and they can pick best terms. So they're really getting a great deal, just like they would in a competitive process. And I think that's been, we put a lot of effort into making sure we have the financial relationships, because these transactions need to work for the sellers. We've even been approached by some companies who have done transactions before in the EOT space, who have said, I did all seller financing. I'm now realizing you guys can go and get financing for me because you speak the bank's language. And we've said, yes, we can. And so we're doing some remedial work for folks. So if you have already transitioned to an EOT, that doesn't mean that the deal is done. If you want to go leverage bank financing to get out your position faster, that's entirely possible.
Yeah, that's such an amazing story about sort of getting that kind of support from the banks there. I mean, getting without a personal guarantee, like that's a sticking point for large geographies, including sort of what we've got here in the Nordics. It's a huge challenge. I mean, there is sort of the local development banks here. They're national, like in the US, they're all state-based. We'll provide some sort of guarantees for that, but they're able to do it without a guarantee at all. Like, how were you able to architect that?
Yeah, I mean, I think some of it is we're working within the appetite of the market, but we're also working really hard to find the partners who understand we're not leveraging these companies beyond 50%. So like if you are a UK EOT and you're like, I want 100% of the value, let me be honest with you, no one's going to lend you that. But if you are saying like, I would like 40% upfront, or I would like 50% upfront, and you have the historical cash flows, one of the things that we talk about in these transactions is, this is not a typical succession transaction. In a typical succession transaction, the seller is trying to maximize for price and the buyer is trying to maximize for return on investment. So everybody's got a point that they're trying to get to and they're trying to crank that up. That's not how an EOT works. Like in a trust scenario, you want the seller to get something that makes it valuable for them. You want the company to be in a financially healthy position, and you want to have some flowing to the employees, a small amount that gives them the taste of the fact that they own it and they can get excited about improving the performance. And there are a lot of ways you can balance that. So we have had situations where we've had people come in and say, look, I want to sell 51% or 60% of the company, and I want to do it all with bank financing. At that point, they realize, oh, the bank financing is going to add risk to the company. So it's going to decrease my personal risk, but it's going to add risk to the company. And they'll say, you know what, the banks will say, yeah, we'll finance the full transaction. They'll say, you know what, let's go down. Let's take 40% bank financing or 30% bank financing. And then because the leverage is lower and the bank has a higher sense of comfort with it, you can get more flexible with bank terms. You can say, look, I'd like to do cash sweep. So if there's extra cash, the seller gets to take that out. Or I'd like to repay it really fast and then 3 years later have the bank come back in for another round. So it's super flexible. And it goes back to that question, what do all the parties need for this to be a successful transaction? So there's some architecting that happens, but a lot of it isn't really, the barrier isn't the banks, really. The barrier is, do we understand what all of the parties in this transaction need for them to feel like it's a win? And there's usually an easy way to get there. Like that's what, if you're not trying to, like, the place where we have difficulty is when owners come to us and they go, look, I want to do an EOT. I want the capital gains tax exemption. I still want to be the chair of the board. I want de facto control over everything. I want all of my money out right away and my employees don't get everything. And those are tough conversations because we say to people like, you know, like even if this were possible in a technical sense, the outcome would not be something you'd be happy with. So why don't we start from what you really need? What are your minimum needs for cash? What are your minimum needs for control? Like, let's have a real conversation instead of just in a reactive, I control everything, I get what I want. Let's like slow down really think about it. And you know what? Some of those folks who have come to us with that attitude to begin with have been the most amazing owners in the transaction process because they've gone through the process themselves already to think about what they really want. They have a much clearer vision of what success looks like.
Okay. Yeah, because I find that there's a lot of people out there who are educated on the traditional exit path. A lot of that sort of they're going and chasing a trade sale, or they're chasing a sort of typical sort of private equity style acquirer, looking to get that majority stake out, and they're not coming in with that flexible mindset. I mean, how do you flip that around so that people are actually thinking more about optimizing it for their own personal outcomes?
Yeah, I think we don't flip it. I think we just simply ask the questions and they flip it themselves. Like if they've come for an EOT, it could just be that they're there for the tax break. I feel like in more developed markets, people, really lean on that for the tax break. And we go, okay, we'll try to maximize the tax break that you get attached with this. And then the next question is, do you plan to stay in the company? And if so, for how long? And if you're staying for a period of time, what would you like your life to look like? Do you want to go to work every day? Do you not want to go to work every day? Most people would like to work less. Well, once they want to work less, then the next question is, okay, if you're working less, who's holding your roles?
Who's doing it?
Pretty soon we start talking about the team. We start talking about team's capacity. We start talking about how that team could improve their capacity. We start talking about how they relate to governance. And the next thing you know, they've brought themselves around because they started from a position of, once they really think seriously about transition of the company, I don't think there's an owner out there that doesn't want to protect their legacy. Like, even if you want to sell for a really big exit, you're proud of what you built, right? And so they'll talk themselves into a good EOT if we give them the time and ask the questions.
How long does that take you guys? Because you speak to some owners, they just, well, no, I just want my transaction. Or sometimes they've got their intermediary, they've got their broker who might be limiting access to someone like you or playing you off against other M&A advisors. How long does that process take for you guys to have that conversation?
Yeah, I mean, so we do the way we work is we do a three-step approach. So the first thing we do is like a feasibility. So if somebody's just interested in EOT, there's legislation, there's finance, there's ownership constraints that we need to understand. So we do feasibility first. If feasibility says, yes, your company could do it, your team could do it, we think there's something here, then they go to road mapping. Road mapping is really an exercise that allows us to look at all the different potential ways that we could finance and fund this. Will it be just seller finance? Will it be bank finance? Will it be bank and seller finance? If so, what are going to be the terms? How much do you want to flow to the employees? So we really scenario the heck out of this thing. And we go one layer deeper in the interviews to try to understand management's capacity and where the potential gaps are, and to do an assessment of culture. Usually by that point, and this is all pre-transaction. There's no transaction fee yet. These are small fixed fees for the work that we do. Like, it's not a big transaction. By that point, we've had the conversation. And not only have we had it with the owner, we've also had it usually with the owner's spouse or any minority shareholders. And when we're coming back to present, this is what we hear, this is what we see, this is what we see in your team, this is where the culture is. They often will reflect, maybe they haven't done a culture exercise before, but when our head of design and implementation is saying, here's what I see in your culture, here's what you are, here are the gaps, and here's things we're going to have to work through, they go into problem solving mode. And so the process kind of allows them to get there on their own. If they were going to come to us and be like, we're going to transact and we had to sign a transaction fee, I think it would be hard. I think it takes people learning education. And that process, we do feasibility studies take about a month. If we're going out for a bank term sheet to see bank financing, then it could take a bit longer. Road mapping can take about 2 months. So you're already sort of 3 or 4 months into a conversation, thinking about it seriously before you go to transaction. And the transaction itself, we say people should not do this in less than 6 months because there are a lot of moving pieces in this.
I love the fact that you get these owners to be able to commit to at least sort of to make an investment as well in this road mapping and understanding capacity, because as I said, that's not something that a lot of the other sort of M&A advisors are going to be charging or going to be going through with that. Do you get much resistance from owners to pretend? No. Okay.
No, not at all. The one place where we do get resistance is people do not want, sometimes right up until the end of road mapping, they do not want their employees to know about it. And that's okay. We do feel like a more complete assessment of culture and what it will take for culture change happens if we can talk to your senior managers that you trust, like CFO, COO, that sort of thing. But if we can't, then we'll just work with the way the owner sees it. Sometimes there's a big mismatch between how the owner sees it and how the culture actually sees it. But a lot of the time it's very similar. So I would say And you know what? I think what you just said about our process being very different from a typical M&A process, it is, because after the transaction, these people still have to run this company. So we're very, like, if you go to, we call ourselves M&A so people understand where we fit in the spectrum, right? Like, what is the role that we hold versus what others hold? We're not strictly M&A. We're not trying to sell your company on to an outside party for the highest value. We're trying to change your company's ownership to allow maximum cultural control and maximum success post-transaction. Those are very different objectives than highest price to whomever bought.
Yeah, I love that. Yeah, that framing is so strong, and I think that's to me, I haven't heard that before. I mean, I also haven't spoken to many providers who are sitting in that seat that you guys are sitting in. Sort of, because as I said, in the US it's so fragmented. In the UK, it's just sort of legal and trust focused. Yeah, so you guys are really capturing everything. Why did you guys decide to do that? I mean, was that just to solve the big problem, and rather than just trying to sort of pick up what's available?
Yeah, I mean, maybe it's a little bit my fault that we ended up this way. I think partly because I am so passionately involved in trying to fight for better legislation with the EOC and with John and the coalition. And then in Canada, we were given this very weird short window where we have like 3 years before then they need to renew the capital gains tax exemption. So when we were setting up Rewrite to be able to do transaction support, we went out and pulled every best practice we could find. We talked to a lot of different service providers. We also talked to dozens and dozens of companies in the US and the UK and said, what went wrong? If you had done this differently, or you could do this differently, or you were going to go back, what would you do? And what's so interesting is that the thing that they said was the biggest problem was the change management. And it's also the thing at the time they said they didn't want to pay for. And so when we saw that, the way these two things connect is, we need to prove by the end of 2026 that the EOTs that we make are great companies, that they work for the employees, they work for the owners. We need every story that comes out of a transaction to be a great story, because we do not have enough time to make a case with a handful that went through this but don't really know what they're doing. So when I was designing Rewrite, I was like, okay, we know we need to do financial legal transaction. That's the core of what happens. And we don't do the legal ourselves. We work with great legal partners, but we do a lot of the pre-work for them. So we talk about it like we architect, they do construction. That's one part we have to. But we need these transactions to be great. And so if we look at all of the problems that the UK companies and the US companies have had, places where there are backlashes, where there are fights, where things do not work well, how do we build to make sure that that does not happen? And that is what Rewrite is. And so Canadian companies can elect to do it without this change management process. They can just go to a lawyer like they do in the UK, and they can just get an EOT. And if they want to, that's fine. That's fine. But if they're going to work with us, we want on the other side of that transaction for their people to be thrilled, their owners to be thrilled, the company to be super strong. We want a victory for the whole market outside of that. And the consequence of doing that is that I think we're just building a stronger EOT market from scratch. Like, when people go and talk to these companies they're not just excited to be EOTs, they're good at it. And they've only been out the gate for a couple of months. And that's really what we're hoping to do. And this again goes back to that idea, like, Canadian legislation is amazingly flexible. It has like the flexibility of the UK. It has some of the strengths of the US model without the over-constrained legislative process, because we were able to leapfrog you. We were able to take best practices and say, what looks even better? And that's what Rewrite's trying to do, is we're saying, like, we looked at the UK model, we look at the US model, we look at all the pain points, and we say, just from scratch, let's just start better. What would be a better process for companies to go through so that they come out stronger? And I think that happens. This is one of the things I love about the international community, is they're so open and transparent. It allows us to iterate and make the international community better. But I think what we'll see in the next few years is that Canadian EOTs are really going to be phenomenal companies, because they've taken the time to do this.
Yeah, look, it's an inspirational approach. I absolutely love it. I mean, there's obviously a few pockets of service providers who are focused on this sort of on the cultural element. The practices in the UK, praxis in the US, Telos in the UK, but packaging it together, like just focusing on the impact, which is not the transaction. It's just a great EO company in service of the business and the workers is so inspirational, Tiara, and it's awesome to hear. And
thank you.
I could keep talking about this for hours, but really want to be mindful of your time. So we're going to be sort of bringing it to a close. And at the end of every interview, I ask you a fast round of questions. So I'm just going to ask 3 quick questions. You can offer a response. How does that sound?
All right, let's give it a go.
Okay. Who is the leader that you most admire in employee ownership?
Oh, Andy, that's a really tough question. It's like asking a person to choose their favorite flavor of pie. They're all wonderful here. I think, I'd like to point to 2 in the Canadian market. Okay, so John Schell is one of them. John Schell is just a force of nature. He is an incredible thought leader, and he's done so much to make that, like, the legislative process possible. So I'm a huge fan of John Schell. For any of you who are not familiar with him, follow him on LinkedIn. He's just full of insight and feisty.
Great content. Yeah, absolutely.
But I'd also like to point to someone who maybe isn't as well known in the employee ownership space outside of Canada, and that is Chad Friesen, Friesen's Press in Altona, Manitoba. Altona is like a very small town. They've been employee owned. This company has been for, I believe, in one form or another, 70 years. They're 100% employee owned. Chad is he's just like a living example. And it wasn't his company. He didn't start it. He's the CEO. He has the same name. He's not related to the family owners. A lot of Friesens in Manitoba. He just is a force for positivity. And we could not have got that legislation over the line. Smart legislation does not come to life unless you have the living, breathing stories of people who live those values and act those values and can show you what it looks like. And he is the example, and his company is the example of what it looks like. So, yeah, I just hold him in very high esteem as well.
Okay, fantastic. And then second, what is your favorite resource on employee ownership?
Yeah, okay. So my favorite resource is actually a compendium of resources. It's employee-ownership.ca. It's for people here in Canada. We got changes to the Income Tax Act, and they were published as changes to the Income Tax Act. No one reads that. No one. I mean, I've met accountants who don't read it. Yeah. So there is no good explanation for EOTs except for that, which has been produced at employee-ownership.ca. So if you're trying to figure out what the heck is this model, or your advisors seem confused about it, start there. That's like the very, very best place to learn about it.
Okay, awesome. We'll have a link for that in the show notes. And then finally, what would you say to a business owner who's sitting on the fence regarding a transition to employee ownership?
Yeah, what would I say to a business owner who's sitting on the fence? I would say that this model, I would say 2 things. First of all, I would say uncertainty is not the same thing as risk. Just because you're not familiar with it or your service providers are not familiar with it doesn't mean it's risky. It just means that it's not known. And unfortunately, we tend to experience emotionally uncertainty and risk is the same thing. This is not risk. This is just uncertainty. So take a minute and learn a little bit about it. And the second thing that I would say is start with that exercise of vision. The day after you leave, and the year after you leave, and the 10 years after you've been gone from that company, what do you really hope it looks like? And how are you in your exit going to preserve that or make that possible? Now, employee ownership is not the only way to do it, but it is a really good way because it allows you to have that cultural control. And as long as you can get your finances out in a timely way, a way that meets your own personal goals, you can sleep well for the rest of your life knowing that. So I would say don't start with what your advisors tell you is the most likely or the best thing to do. They're giving you the most common. They're not necessarily giving you the best answer. So start with defining for yourself what the best outcome of an exit looks like for that company. And I think you will discover that people can make that happen for you.
Awesome. I love it. Tiara, thank you so much for sharing your knowledge and your passion for helping people to adopt employee ownership. I mean, where can people go if they want to follow your story or learn a little bit more about your work?
Yeah, I would say follow me on LinkedIn. Feel free to connect or send out a message. You can also write to me. I'm Tiara at rewrite.capital. Happy to connect with folks anywhere you are in the world. This is the subject I love the most, and I'd be happy to talk to you about it.
Awesome. Tiara, thanks again for your time and thanks for joining us on The Alternative Exit.
Thanks, Andy. Keep up the great work in this community. We all appreciate it.
Cheers. We hope you enjoyed this episode. If you want to continue learning about employee ownership as an alternative exit, head across to abettermonday.me for additional links and resources. You can also make sure to subscribe or follow along in your favourite podcast app, and be sure to leave us a 5-star review.